Internal Revenue Service IRS tax news. Things people do during the summer that might affect their tax return next year. IRS Tax Tip 2021-102, July 15, 2021. It's summertime, and for many people, summertime means change. Whether it's a life change or a typical summer event, it could affect income taxes. So clearly, every decision you make in life should be made through the prism of what's going to be the impact on the taxes. That includes any summertime fun, and of course, your tax professional has the ultimate authority as to whether or not you go through with any kind of activity or not based on their assessment. I'm just kidding on that. That's probably a little bit too far, but you might want to take into consideration the tax impact on some of the big ticket type of items that could have a significant impact on the taxes as you move forward with the decision. So here are a few summertime activities and tips on how taxpayers should consider them during filing season. So getting married. So if you're thinking about getting married, of course, what do you do first? You call your tax professional and you can see if you get permission from them to do so from a tax perspective. So I'm just kidding again, probably not the best way to do it, but you might want to consider what the tax implications would be when getting married so that you're making sure that you have everything kind of planned out and there's no kind of surprises going forward when you think about joining the tax returns together. Obviously, there's going to be some things logistically that you'll have to take care of, like address changes and possibly name changes and that kind of thing. There's also tax planning that you do want to have in mind, because before getting married, you got two tax returns filing separately. When you get married, then you're going to be filing one tax return. In essence, that's going to be the general concept of it. Many people are a little confused on the filing status, often thinking that you have the option of still filing, single or married once married. That's not generally the case. You got an option of filing married, filing joint generally, or you can be filing married, filing separate, which is not the same thing as married as single, filing single or filing head of household. You typically have a lot less in terms of capabilities to take advantage of certain kind of credits and whatnot if you file married filing separate, due to the fact that the IRS is suspicious about people filing married filing separate and taking advantage of kind of tax benefits in that format. So they limit them severely. So just note that normally the IRS is trying to put it so that if you are two individuals and you get married and now you file one tax return, that there shouldn't be a tax detriment for that to be happening. But the tax code is quite complex, so to actually do that logistically is quite difficult because you have a progressive tax system. So they got to change the rates of the progressive tax system in order to have the rates kind of come out evenly if you had two people filing separate compared to two people coming together. And then all of these refundable credits and this kind of thing, especially on the low income side of things, child tax credit, earned income tax credit, and so on, get kind of complicated when the marriage, when you try to combine two tax returns together. So you might want to have those kind of things in mind just on the filing time so you're aware of them. So anyways, getting married, newlyweds should report any name change to the Social Security Administration. They should also report an address change. There's a link to that to the United States Postal Service, their employers, and the IRS. This will help make sure they receive documents and other items they will need to file their taxes. Sending kids to summer day camp. Unlike overnight camps, the cost of summer day camp may count toward the child and dependent care credit. So you might be able to get some benefit from those expenses. So you want to make sure in that case then that you've got the information related to the daycare camp and you're filing that away with your tax information in the event that you can deduct it. That means you want the name of the daycare camp and whatnot, the children that went to the daycare camp name and whatnot, and you want their ID number, their tax ID number as well, so they can populate that when you fill out the tax return. So work and notice if it is a camp that qualifies for a credit, then you can ask them about it, and they're probably very aware of that. That's probably a marketing tool that they have, and make sure that, and they should be able then to provide you with an EIN number, which you can then put on your taxes to indicate that camp and possibly get a benefit for it. So working part-time, while summertime and part-time workers may not earn enough to owe federal income tax, they should remember to file a tax return. They'll need to file early next year to get a refund for taxes withheld from their checks this year. So note, if you're working part-time, possibly people going to school and whatnot, and they do summertime work, or just people that are picking up some summertime work, then make sure that you still want to file the taxes generally. Note that if you make a little bit of income, you might say it's not worth filing my tax return, but it still may be worth filing the tax return, because even if you make a little bit of income, they're probably going to withhold some money for federal taxes and state taxes unless you tell them on the W-4 not to withhold anything, because you're not required to. And even if that's a minimal amount, you may still then qualify for an earned income tax credit, child tax credit, and credits that are refundable type of credits that are being increased at this point in time. And the filing software to do so, just to check that out, is generally free at this point, and maybe next year as well if your income is below a certain threshold. So you probably want to plan for filing in that case, just to take a look at it and see if you have any benefits related to you. Again, just remember that the fact that you're not required to file just means that the IRS basically isn't going to come after you if you're not filing. You're typically not required to file if your income is below a certain threshold, because you're not going to owe any taxes. But at this point in time, the fact that you're not owing any taxes does not mean you're not qualifying for a benefit program. Even if you don't have any withholdings, you might get money back, because these refundable credits that they're putting through the tax code now are affecting a lot of people that aren't required to file their taxes, because their taxes would normally, or their income would normally be below the threshold to owe any money. So then we have the gig economy work. Taxpayers may earn summer income by providing on-demand work, services, or goods, often through a digital platform like an app or website. Examples include ride-sharing, delivery services, and other activities. Those who do are encouraged to visit the Gig Economy Tax Center. There's a link to that here at the IRS.gov to learn more about how participating in the sharing economy can affect their taxes. So note, the gig economy is something the IRS is very focused in on, because it's growing in size, and it's one of those types of things that it's similar to what a cash kind of business was before. The IRS has always been skeptical of kind of like hair salons and nail salons and like bars and stuff like that have a lot of cash flow in the business, because and the cash is coming from individuals, not other businesses, because it's harder for them to kind of track the money, because one, it's cash, and two, it's not coming from a business that they can pressure to 1099 those people, but from others. I almost feel like that's why during the whole pandemic, the hair salons and the nail salons got a lot of pressure on them. I kind of feel like the IRS doesn't like them in the first point, right? So they kind of put a lot of pressure on. The restaurants seem to get a lot of pressure. The hair salons and the nail salons seem to get, more pressure. Obviously, they're service businesses, so that was a problem during the time. But I don't think the IRS likes them in the first place, because they have a cash kind of economy, and it's harder to regulate that. And so the same kind of thing is happening with the gig work, because they don't know who to pressure to give the 1099 out. So if you're working in gig work, the platform is really just kind of connecting two people together. They're not really the employer from a classical kind of sense, and therefore the IRS cannot pressure the platform typically to force them to give a W-2 or 1099 to the gig worker, or they've had trouble trying to do that because it's not like a direct employee relationship. The platform is more like a connecting hub between two people, and you're basically serving the customers. So again, it's hard for the IRS to track it. Now they're going to try to do something about that. Most likely, they're going to try to go after the platforms to force them to treat people as an employee, which will probably devastate the gig economy. It won't be good for the economy, but then they can see how much people are earning and take some of their money. Or they might try to force the platforms to somehow be able to track and give out a 1099, which means that you'd have to report it on your Schedule C. So in other words, if you work on these digital platforms, then they might start hiring you as an employee, in which case you'll get a W-2, and it'll be a fairly straightforward thing that you might be used to. They might start to force them to try to track the earnings and give some kind of 1099, in which case you've got to file a Schedule C business, and the IRS has a report of the income they have. So if you do not file a Schedule C, then the IRS has the income side, and they don't have the expense side, and so they might try to charge you on the gross revenue instead of the net revenue. Or they might not have a handle on that gig economy yet. They might not have crippled it yet with their regulations, and you don't get anything like a 1099 or a W-2, but you still should be reporting the income in that case as well. on the Schedule C and making sure that you're going to be paying the proper tax. So you got to calculate the proper tax and make the estimated payments related to it. Okay, so normally employees receive a W-2 wage and tax statement from their employer to account for the summer's work. They'll use this to prepare their tax return. They should receive the W-2 by January 31st next year. Employees will get a W-2 even if they no longer work for the summertime employer. Summertime workers can avoid higher tax bills and lost benefits if they know their correct status. Employers will determine whether the people who work for them are employees or independent contractors. So that's the big step. These platforms mostly were designed, originally at least, to have the people basically be independent contractors, and the platforms just kind of put them together. And if you're an independent contractor, whether you get a 1099 or not, you should be filing, your tax return and reporting it on a Schedule C. And that's confusing to many people because they've never done that before if it's just a W-2 employee before. And so you got to make sure that you're paying the proper amount of taxes, tracking your expenses, and making sure that you're filling that out properly so that you can both calculate the taxes and pay them beforehand so that you can, you're on top of it. So independent contractors aren't subject to withholding, making them responsible for paying their own income taxes plus Social Security and Medicare taxes.